Okay, so just looking at moving forward and finishing up really, because we just have 2 chapters left. What? So today we'll look at chapter 23, and then next week we'll look at chapter 24. Wednesday, November 20th, we will review over 23 and 24. Honestly, Wednesday, December 4th, I will probably cancel class because we just have things to do that day anyway, and my daughter has a robotics expo in Mustang. I don't know why they do it on a Wednesday night. They normally don't have like school events on Wednesday night, but so I'll make sure and post everything though. So I guess technically our last meeting will be before Thanksgiving because finals week starts the 11th. So our final class would have been Wednesday, December 4th, but like I said, it's really just a due date, so we'll probably not meet that day. But we'll talk about that before we break for Thanksgiving and make sure we've got everything covered and everyone's good, because it may just be we can meet like video meet if we need to, video chat or something if anyone needs me, because that's such a long break there. It's like, hey, we're done. But it's really only one class, so we'll take a look at that as we get closer. But yeah, we just have the 2 chapters left, and then the data analytics project. That one is actually pretty simple. I'll go ahead and show you guys that are here right now a little bit, and then I think Eric said he was running late. I don't know about Charles. So I'm recording it though, so we can always go back. That way, for those of you that want to get started, you can go ahead and knock it out before break. And then it's not due till December 4th. And then I don't have the final in here yet. The final exam will be optional though, so that'll be due the 11th, and that's its finals day. So I don't think at this point no one really needs to replace an exam, so we'll look at it again as we get closer. But the final will be optional, so it'll be a take-home, do it just like the others, really. It'll just be questions from the past exams. So it'll replace a low exam score. I don't even have to say missing in here because everyone's taken all the exams. Yay! So if we need a final exam, that'll be due on the 11th. I just haven't had a chance to make it up yet, but that'll be out there. I think everything else is, I'm working on getting the chapter 24 homework out there and the last test. So that should all be out by next week at the latest though. So 2 chapters of homework, 1 exam, and then we'll have the data analytics project. Again, that project is really only like about an hour, hour and a half to complete. So it's nothing major. So we will take a look at that right now. But yeah, as far as the data analytics project goes, it's really just following instructions and then doing a quiz. So I've given you steps as far as you're going to open up a data file. So just to kind of show you, now that we have the links working, right? Step 1, links work. Once it opens up now, it's being slow. So when you open up the data file, you'll see a big Excel spreadsheet with like region, state, salesperson, insurance type, all that fun stuff. Just make sure you click the enable editing so you'll be able to work in it. So all of your work on this project is going to take place within this data file. What you're going to be doing is some data analysis within it. So you're going to be doing pivot tables and then calculating some variable cost, I think you did that in this one, contribution margin, that sort of thing. You're going to be calculating those, and then just really the whole purpose is to be able to take a large amount of data and summarize it in a way that it becomes useful and meaningful. You know, when we look at it like this, it means really nothing to us, right? We could sort it smallest to largest and things like that, but it's not really useful, meaningful data. So when we get raw data like this that we've pulled like from a database, we can then organize it into tables and pivot tables to answer questions that we may have. Like if we want to know who the top insurance salesman is in the Midwest region, you know, again, if we do the right data analysis, that can be a very quick organizational thing that we can figure out and answer those questions. So that's kind of the purpose. So you'll be using this file. And there's two ways that you can go over the tutorial. There's a PDF tutorial that has slides that show you step by step, or there's a YouTube video that walks you through it. So it shows the same slides, but it also has voice instructions and shows you on the video. So I personally like the PDF tutorial because the video, sometimes I have to pause it because they go a little faster. If you have two computer screens, you could play the video or play the video in like a tablet or your phone or something. Probably a tablet just to get it to show what you need to show. So that'll walk you through and tell you step by step. They're using like a tutorial data file, but the same steps apply to our data file. You can read over the case. I'm kind of open that and show you real quick. The case just kind of sets up the project. It tells you, it's really important that college graduates have data analytics skills. We're just using Excel. We're not using Power BI or Tableau in this course. But they're telling you this is real life data. So this is from a national insurance company, CAT Insurance Corporation. And you're going to actually have a data set that has over 65,000 insurance sales records from 2017. It's been made anonymous to preserve privacy, but it is real data, okay? So that way you're getting a real example. So what you're going to be doing are these requirements. So you can read through to kind of see, what you're going to be doing to the data. You're going to be finding errors and correcting them. You're going to be calculating variable cost and contribution margin for each policy sold. You're going to total sales revenue, variable cost, and contribution margin. You're going to calculate contribution margin ratio, and then margin ratio per state, rank the states, and also look at regions. As far as analyzing the information, you're really just answering these questions, okay? So that's kind of the goal there. Again, with the data file open though, what you really just need is this PDF tutorial. The PDF tutorial or the video, either one can be used or both, is going to tell you step by step. So if you're not super familiar with Excel, don't worry. You don't really have to be. It's going to tell you step by step what to do, okay? So for example, we'll be doing some pivot tables. They're using Office 365. So if you have a different version, then I think it's based on Excel 2017. I know like here, I can't remember in this lab, I think we have the new version. Like in my office, I have the new Excel. And so some of the things look a little different. I think in this one it worked okay. But if you have the newest version of Excel, some things may look just slightly different. But it's going to tell you, start by opening the Excel workbook. We're just talking about the data analytics project. Okay. So start by opening the Excel workbook, which again, I have open here. And then you will be using the Excel file to create stuff. You like that stuff, So then it just goes into the requirements. So again, the requirements are going to follow a tutorial set of data, but you're going to follow these same steps. It just won't look the same as the slides. So requirement 1 is to find and correct errors in the region and insurance type fields. So it's going to tell you step by step. For example, in requirement 1, it says click on any cell in the data in the sales data worksheet. So just to kind of show you what we're doing, I can literally click anywhere in this file. And then it's going to tell you to insert a pivot table. So I'm going to click on insert up in the green and go to pivot table. When you do that, it opens up this create pivot table dialog box. As long as it's putting it into a new worksheet, you just click OK and you're good. Okay. And then again, I could follow these. I kind of, did. So I went on the insert ribbon, clicked pivot table, accepted the defaults to insert the pivot table. So then I'm down here on this step. So what they want you to do first before you get started is to rename the sheet. So to rename a sheet, you just right click on it and go to rename, right click, rename. I can just type like REQ1 for requirement 1 and hit enter. Okay. And then it's going to tell us how to set up our pivot table. So it says drag region down to the rows and sales to the values. So over here on the right-hand side is where you'll be setting up your pivot table. So I'm going to drag region to rows. Oh, I didn't get my drag. Region to rows. And I think it's at sales to values, right? Regions to rows and sales to value. So I really quickly summarized this data with a pivot chart. So that's what you're going to be doing in some of these steps, and then doing some formulas and stuff, but it tells you exactly step by step how to do it. So when I do that, this helps me identify if there's any errors. In this first requirement, we're looking for errors. And I see Midwest, New England, North Central. The only error I see 2 errors. You know, we have a southeast and we have a west instead of west. And so it's pretty common when we have, you know, multiple people entering in data into a database that they make errors, you know, typing errors. So when we create this pivot table, we can identify quickly, without looking through 65,000 rows of data, that we have some errors. Okay, and so it's going to instruct us on how to fix those errors. So you're really, this whole project is just stepping through that tutorial and following it and doing each step as you go. You're going to be basically creating pivot tables, summarizing, kind of, you know, cleaning it up, like making it $, decimals, all that fun stuff, you know, making it look more attractive, sorting it, you know, just to be able to answer questions. So like, for example, if I sorted this, I could see, you know, the region with the highest sales. But first I would want to clean up my region data. You know, I'd want to fix those errors. So that's just kind of getting in and showing you, you know, kind of what you're doing. You can use the tutorial or the video. They both go through the same steps, okay? Just make sure you save this data file. So do a file save as, save it, you know, to a flash drive or Google Docs or Google Drive or whatnot, and have access to it. So again, all total, I would say we did one in class in financial. So we got it done in, you know, 75 minutes in class. And that was like, what, there's like 25 of us in there. So I would say about an hour. Of course, you know, I was able to condense some of the steps. So hour, hour and a half, you can easily knock this out. And it's worth 85 points, I think. 65. 65, yeah, it's worth a decent amount of points to just hour and a half knock it out. Then, you know, you get a 100 on it. So you'll complete all those steps. Obviously, save your file. What is that? And there's some check figures. That way you can actually look and make sure that you've done it correctly before you take the project quiz. So just submitting that completed document is worth 65 points. Then you take the project quiz. That's where it gets to 85. The project quiz is like 10 questions, 2 points each. You're just using that data file that you've created and answering the questions, multiple choice. So you'll get all total 85 points, hour and a half long, knock it out, right? So you have until December 4th to get that taken care of. And then again, other than that, we just have these last 2 chapters and the final chapter test, and we're done. Isn't that crazy? It's like going goes so quickly this time of year. Any questions on any of that? And hopefully you'll kind of enjoy it. I think obviously I teach Excel though, and I like accounting, but yeah, I think it's kind of cool just to see how easily you can like summarize information, like large amounts of data. So hopefully you'll kind of enjoy it as you go through it too. And then it's something you can put on your resume that, you know, I wouldn't go like full tilt, but basic data analytics, right? Like I know how to do pivot tables, which is a plus. So any questions on any of that? That's good. All right. Well, let's get into the chapter 23 practice then. So chapter 23, we're looking at decentralizing our operations. So kind of I try to put at the top part of your notes, just really looking at why we would do that. Well, the different structures, you have a centralized company versus decentralized. So a centralized company, it might make sense for like a very small company that doesn't have multiple branches or divisions or regions and things like that, that basically the CEO is the main decision maker, planner, overseer of the company. But once you start getting into, well, we have multiple divisions or different product lines or whatnot, it makes sense really to have what we call decentralized operations. What that means is, we may have 4 product lines and we have a manager over each one of those product lines. And that manager is allowed to make decisions that concern controllable resources in that division. So, the CEO and everything is still going to be making decisions, obviously, planning and budgeting, but the manager of that product line will have some control. They may have control over hiring and firing within their division. They may have control over purchasing materials. They may not be able to set sales prices, or they may not be able to set overhead, like rent and stuff like that. But there's a lot of things that they could be responsible for and have control over. So obviously your notes just list some advantages and disadvantages of decentralized operations. So it makes more sense when a person is in charge of just one product. They're invested in that one product, right? So it makes more sense for them to have more control over the outcomes and decisions. Plus, you want to have, it'll make the manager well trained, because if the manager is the one training, then they know that product line, that situation makes more sense. They become experts. It helps retain managers. I know my husband works, as you probably know, Russell Stover, and they're not fully decentralized, and it's caused issues for him. Like he has no control over how much product they send to him, and they send him too much product, and then it gets charged to his store. And then it affects his bonus and his, bottom line, his gross profit, but he has no control over it. That's frustrating, for him, and obviously for other managers as well. So if you want to have retention, you need to give managers control over the things that they should have control over. And to me, inventory is one of those things. It makes sense to have inventory control as a manager. It shows that you trust your manager, they have the experience, put them in control. Plus, it does allow them to have more control over their own profit line, because they have a vested interest. Like, he didn't even really get a bonus last year because of the way the top is operating. They're setting things that he can't control. So he's still in charge of, hiring and firing at his location and other things, but, inventory management is something big. And then it just improves creativity and customer relations too, because just having that vested interest in your area allows you to focus more. Again, I think you have more buy-in as a manager, and even your employees do then too, because they have a sense of, oh, it really matters what I think and what I do. It has an impact. So what are disadvantages? Well, one disadvantage would be if 2 product lines were making decisions that conflicted. If one product line was basically doing something that somehow impeded the other product line. So sometimes when you have decentralized, you're not looking at the big picture then as much. You're looking at just your area, and you may make a decision that benefits your area that could have a negative effect on another area. And then duplicating assets and expenses can happen in decentralization as well, because you may have more managers and then more resources, assigned to them. Overall, it depends on the industry. It depends on the size of the organization, which one is better. And I think in most cases, if it's a larger company, decentralization makes sense. There are advantages. The advantages outweigh the disadvantages. I think it's just important that if you are decentralized, you're still communicating with the other departments and with the main office, so everyone is on the same goal and looking out for each other. So when we talk about decentralization, we're talking about kind of separating the company into different centers, responsibility centers. We get into responsibility accounting. So what that means is we may have a cost center. So like the production department, they're not actually selling anything. So they are just in charge of controlling costs. They're controlling wages and labor, or that's the same thing, materials that we purchase, some overhead that they have control over. So a cost center is going to be a production manager is going to be in charge of just controlling costs. Whereas if it's a profit center, if I'm in charge, if I'm the manager of a product line, then I'm controlling costs and revenues. You know, I'm looking at both. And then we also have investment centers. So investment centers are going to be like regional managers possibly, and people like that that are going to have similar control responsibilities to a CEO. So they're looking at revenues and costs as well as investment, like assets and things. So assets invested. So just kind of breaking that down a little bit. The big takeaway here is that profit centers, we're going to look at some examples where we have what we call service centers. So like maintenance, for example, is a service center. They're providing maintenance to several profit centers, and we needed to figure out how do we take those maintenance costs and split them up among the different profit centers. It could be also like payroll or purchasing, any service center that, you know, really are cost center. We need to figure out a way to allocate costs to the different profit centers is all we're really getting into. And then the rest of this chapter, when we're not dealing with like profit centers, we're looking at investment centers. So we're calculating return on income from our assets, residual income, and things like that. So just to kind of let you know what this chapter is about. So the first one is dealing with service department charges. So here we're looking at, we have a company that has payroll department and purchasing department. Well, both of those are cost centers or service department centers, and they help support our profit centers. So we have 3 profit centers: residential, commercial, and government contracting. We want to take our costs that are incurred in payroll and in purchasing and allocate them into residential, commercial, and government contract departments. So basically we're just charging them. That's all we're doing. We're charging costs. We're allocating expenses. So it tells us the payroll department had expenses of $64,560, and purchasing had expenses of $40,000 for the year. So we want to take those expenses from payroll and purchasing and allocate them or charge those to the profit center. Okay. So it tells us some basic information: sales for residential, commercial, and government contract. And then it tells us the number of employees and how many payrolls, you know, within the payrolls we have weekly and monthly, and the number of purchase requisitions per year. So basically what we're going to do is it tells us payroll department costs are charged back to the profit centers based on the number of payroll distributions. So what we want to do is we want to calculate the total number of payrolls for the whole company and calculate like a cost per payroll, okay? And then we can allocate to a residential, commercial, and government contract. So that's kind of what we're doing here. And then for purchasing, it's based on number of purchase requisitions per year. So we're just allocating based on that. So what we're going to do, well, the first thing we're going to calculate is the number of actual payroll checks. They gave us the total number of purchase requisitions per year, so we won't have to calculate anything there, but we do need to calculate the number of payroll checks. Well, for residential, we have 400 weekly payrolls and 52 weeks in a year. So truly just take 400 times 52. And for residential, we'd have 20,800 weekly payrolls, 20,800. And monthly, we have 80 times 12 months, 80 times 12 months, or 960. 960. So all total residential, you should have 21,760 payrolls, 21,760. And then for residential, they told us the number of purchase requisitions was 7,500. So I'll just go ahead and fill that in. Okay, commercial, I would do the same thing. Weekly payroll, 250 times 52 years, or 52 years, 52 months. We'll get it right? 13,000. 13,000. Monthly, we have 30 times 12. 30 times 12, or 360. So all total commercial should have 13,360. 13,360. And they have 3,000 purchase orders or purchase requisitions. For government, we have 150 times 52 for weekly, or 7,800. 7,800. Monthly, 10 times 12, or 120. 120. So all total, government contract has what, 7,920. 7,920. And they have 2,000 purchase requisitions. Scroll over here. So then we just need to calculate our total payroll, you know, the total number of payrolls we have. So I would just add up my 21,760 plus my 13,360 plus the 7,920. And all total, this whole company, all the profit centers have 43,040. 43,040. And then total purchase rec, 7,500 plus 3,000 plus 2,000, 12,500 purchase requisitions. So regardless of how they give us the data, our goal here is to calculate our total payroll, number of payroll, and our total number of purchase requisitions. Once we have that information, we can calculate a cost per payroll and per purchase requisition. So our rates, what we're calculating is a service charge rate. We would take our total payroll department, the 43,040. I'm sorry, we would take our total charges. I'm getting ahead of myself. We take our payroll department expenses, which were 64,560, 64,560, and divide by the total number of payroll checks of 43,040. What would be my charge per payroll check? How much? Yeah, 1.5, very good. So $1.50 per payroll check. And we do the same thing for purchasing. We have purchasing charges of 40,000 divided by 12,500 purchase recs. So how much would we charge per purchase rec? 3.2, good. $3.20. Then we're just doing a bunch of math, right? All the fun stuff. We're taking those service department charge rates and applying them now. So for residential, I would want to calculate my payroll department service charge. So I would just take my total payroll, 21,760, times the $1.50 per payroll check. Okay, so you should get what, 32,640. 32,640. And then for purchasing, we have the 7,500 purchase recs times $3.20 per purchase rec, 24,000. 24,000. Add them up, you should get 56,640. So total service department charges getting charged to residential would be $56,640. And then I would just do the same for commercial. We had 13,360 as far as payroll checks times $1.50, 20,040, 20,040, 3,000 purchase recs at $3.20 each, 9,600, 9,600. So total cost 29,640, 29,640. Government, we had 7,920 payroll times $1.50 each. So that would be 11,880, 11,880. And 2,000 purchase recs times $3.20 each, 6,400, 6,400. I add that up and it should get 18,280, 18,280. And then the totals, I would just add, you know, the rows. So the total for payroll department should be 64,560, which matches our total payroll costs. So we've correctly allocated all of our payroll costs. And purchasing would be 40,000, which matches purchasing. So that's kind of a check figure there to make sure that we allocated all of the purchasing costs. So really our goal here is all of those service centers or cost centers, we're going to take their costs and allocate them to profit centers. Okay. Then it says residential service department charge is what? Higher or lower than the other two divisions? Is the residential service department charge higher or lower? Higher, good. And it says that is because residential is a heavy or light? Heavy, right? Yeah. Heavy user of service department services. Residential has many employees on a weekly payroll, which translates into a larger number of payroll transactions. Very good. So again, you know, if we had just taken these payroll and purchasing charges and divided them by 3 and applied them equally to all the different departments, that may not be a fair allocation, right? Because as you can see, residential they have more employees and they obviously do more purchase orders. So they're utilizing those services at a higher rate. So that's why it's better to allocate based on some allocation base. In this case, we based it on payroll checks and purchase requisitions. Okay, so that's the whole purpose behind allocating instead of just applying a rate. Any questions on that? It's just math, right? It's just fun. This next one is pretty similar, only we're doing divisional income statements. So really our divisional income statements are similar to a normal income statement, except for divisional income statements are only going to have charges that are relevant to that division. So you're not going to see any costs that, you know, that they have no control over, basically. But we have been given, Uzamba Technology has 2 divisions, consumer and commercial. They have 2 corporate service departments, tech support and purchasing. So those are service centers that we need to allocate costs. And then they give us the expenses, okay? And then it says tech support department charges the divisions based on number of computers, and purchasing charges divisions based on number of purchase orders. And then they give us that usage information. And then they give us revenues, cost of goods sold, and operating expenses. And they want us to do divisional income statements, okay? So again, we start the same. We're gonna start with, you know, our revenues. And those are given. So 7,430,000 for consumer, 6,184,000 for commercial. Okay, so I'm putting in my revenues. And then I subtract out cost of goods sold, which they also gave, 4,123,000. And then for commercial, 3,125,000. Okay. Well, what goes on my next line? What's revenues minus cost of goods sold equal? Gross profit. Good. Kind of a review, right? I know that one. Like, woohoo! So we just subtract. So what we should get, 3,307,000 for consumer and 3,059,000 for commercial. Okay. So then we're going to take out operating expenses, which are also given. So I'm going to subtract out operating expenses. So 1,465,000, 1,546,000. Make that a little bigger there. Okay. So I subtract there to get income from operations before service department charges. So for consumer, you should get 1,842,000. 1,842,000. And for commercial, it should be 1,513,000. 1,513,000. Okay. So that tells us our income from operations before service department charges. The next part we do have to calculate because we need to know what the service department charges are. So really, again, from there, we're going to allocate costs based on the information that they gave us. So let's see. Sure, I have all the information here. I'll write it on the board so we have the the cost. We know we have two service departments. We have the tech support department and the purchasing department. Tech support and purchasing. So we're going to use this information at the top here. So we need to allocate all that $516,000 to the consumer and commercial based on number of computers. Okay. So again, the first thing I would want to do is calculate the cost to charge per computer. So I would take my total tech department cost of $516,000 and divide it by 600 total computers to get a charge rate of $860 per computer. Okay. So my total tech support department of $516,000 divided by total computers of 600. So we're going to charge both the consumer and commercial division $860 per computer. So consumer has 375 computers times the 860 rate. Okay, so 322,500. So they told us consumer had 375 computers times the 860 rate. So that'll be the service charge for the consumer for tech support. And commercial had 225 computers times 860. So that's what, 193,500? 193,500. So that's for the tech support. For purchasing, we had total costs of 89,600 divided by total purchase orders of 5,600. So we get a cost per purchase order of $16. Okay, $16. And then again, we just allocate. For consumer, they used or issued 1,960 purchase orders, 1,960 times $16, 31,360. Commercial had 3,640 purchase orders for a total cost of $58,240. 58,240. Okay. So we just had to use that information to allocate total costs. That's what we put here on their income statement. So once we calculate the service charges, we just plop them in. So consumer, the tech support department charges consumer $322,500. $322,500. And then we have the purchasing department charges consumer division $31,360. $31,360. Commercial, the tech support was $193,500. And purchasing was $58,240. So then we add up our total service department charges. Pretty straightforward, right? So for consumer, total service department charges $353,860. $353,860. And commercial $251,740. $251,740. And then our last line is income from operations. So we would just take our income from operations before service department minus the service department charges. So 1,842,000 minus 353,860. Consumer division had income of operations of 1,488,140. 1,488,140. Commercial would be 1,513,000 minus 251,740. 1,261,260. So 1,261,260. Those aren't too bad, right? It's really just calculating, just making sure you do the allocations correctly. And then really, again, your income statement's pretty similar just for the charges that those divisions are responsible for, okay? So there's other corporate administrative expenses that they are not responsible for that are listed that you will not use. Any questions on that one? Okay. So that's allocating charges and looking at divisional income statements. The next one's getting into investment centers. It's talking about calculating return on investment. So based on all the assets that we've invested into a company, how much return are we seeing from that? Because, you know, we're spending money, putting assets into the divisions. Are we seeing a return on our investment? Okay. So this one, these are actually pretty simple. I just did it so you could see how it's done, and it's in your notes. To calculate return on investment, you're truly just taking income from operations divided by invested assets. Okay. So for retail, I would take 5.4 million divided by 30,000 or 30 million, sorry, and you should get an 18% return. Okay. For commercial, you're taking 6,250,000 divided by 25 million, and you should get 25% return. And internet, 1.8 million divided by 12 million, 15% return on investment. So pretty simple, just thought we'd kind of give us a chance to talk about return on investment. So which division is the most profitable per dollar invested? Commercial. So with return on investment, we want a higher percentage. So the higher the percentage, the better return we have. So commercial division has the best return on income, okay, or return on investment, sorry. So they're actually utilizing their assets the best to get the highest income out of it. So that's just another point where, you know, probably then the regional manager is looking at these three divisions and trying to decide, you know, why is internet low? Like, what can we do? Do we need to reduce assets invested, or do we need to increase income? You know, these are just things that spur those conversations. Any questions on that one? Kind of moved on. The last one is dealing with residual income. Okay, residual income. So it's the same information. We have the same income from operations and invested assets. And it just says, assume that management has established a 9% minimum acceptable return for invested assets. So they're setting a minimum there. They're saying you need to at least hit 9%. And then anything beyond that 9% is residual income, meaning it's income beyond like their target, you know, what they require. It's kind of a bench line, you know, a benchmark, okay? So this one's pretty easy too, really. To calculate minimal acceptable income from operations, you're truly just taking your invested assets times 9%, okay? So for retail division, you're taking 30 million, it's a little bit higher than 30,000, 30 million times 9%. So the minimal acceptable income should be what, 2,700,000? I can get the right zeros. There we go. Okay, so 30 million, I'll say it right eventually, 30 million times 9%. So to calculate residual income, we take income from operations minus that benchmark, or that minimum acceptable. And you get 2,700,000. So they're, you know, what, 100% over that minimal acceptable income. So you have good residual income. And then we do the same for commercial. We would take 25 million, I'll say it, 25 million times 9%, 2,250,000 would be their minimum acceptable income, 2,250,000. So they have a residual income of 4 million. The commercial division has a residual income of 4 million. And then internet, we take 12 million times 9%. And their minimum acceptable income is 1,080,000. 1,080,000. So they obviously have the lowest residual income of 720,000. 720,000. And then it just asks which division has the most. Well, it's obviously commercial. Good. Yeah, it's the commercial division has the most residual income. So they're really, you know, from analyzing from an investment center standpoint, commercial had the highest return on investment and they have the highest amount of residual income. And those are correlated, obviously. You know, when you have a higher return on investment, you're going to have a higher residual income. So again, you're just looking at kind of analyzing that. This is just a basic overview. Your notes also has different ways of calculating return on income using what they call the DuPont formula. It's just a different manner of getting to the same data, really. But I thought I included that on your notes in case you see that on the homework or anything. But yeah, we're just really looking at divvying up costs and what is controlled by each profit center on a very basic level. Any questions on any of that? All right, well, I think that covers it for today.